Okay, guys, this is day 3 of our 4-day challenge, and there was some discussion here about the trade that I placed yesterday. And here, let me go live here. Okay, the trade we put on yesterday, whether it was 5 delta or 10 delta, and I'm pretty sure it was at least 10 delta because the 4200 level yesterday. We got that around 70 cents, and so pretty sure that that trade at the 4200 level was a delta of 10 to 12. Okay. All right. So let's get into this here. Okay. So yesterday we talked about entering a trade, and we did enter a trade actually, and when the conditions were ideal or not so ideal, and definitely yesterday was not so ideal because what I would normally do is place a trade in the morning, and it would have been probably lower than what it was, what we after the market had moved up towards the noon of the day, right? And then but in any case, what I wanted to show for that is that basically you don't have to have ideal conditions to put on this trade. It works, and especially with the volatility that we're having, the market, when we put on that trade, the market was 150 points away from the market. I know that last night we actually moved down about 70 points, okay, and the trade is not threatened, because of that. And so it's far from being threatened. Actually, we're at this point we're about 50 points, 50 or 60 points away from it being threatened. So we're good. All right. So it was not ideal, but it still works, as you can see. Okay. When not to place a trade, we talked about that, and that is usually during like a Fed meeting or some kind of news event that you want to wait for, and they don't happen too often, but in any case, those are the kinds of things you don't want to jump in there and put on the trade right away. Okay. So we also talked about common chart patterns that are out there, and the technical indicators I use, basically fibs, RSI, those indicators. I keep it, I try to keep it simple, and honestly, if you look at the indicators, almost all of them have to do with support and resistance. And why not use the the main tool, which is fibs, right? Fib retracements, extensions, to utilize, because that really gives you the most power for support and resistance. All right. Okay, so we did that, and then what we're going to do today is we're going to talk about rolling trades. We're going to talk about rolling threatened trade and then a trade that's already been breached. Okay, so let's move in here. Okay, so now this is actually a trade that I had on. Okay, and I had rolled this trade before. And so let's walk through it here. Let me get my pointer. Okay, so the 6 is basically the number of contracts that we're using in this trade. Vertical means it's vertical, one on top of the other. Put or call on top of the other. The 100 stands for SPX 100. It means the number of shares per contract. Okay, option contracts. It doesn't mean 500 stocks or 100 stocks. So I just wanted to make that clear. 6th October is actually the expiration date, and you can see that it's today. So I had rolled this trade, and it was the strike prices are 43.30 and 43.20, and it's a put spread, and the premium at that time after being rolled was 35 cents. because I had probably deducted from a roll that I had done previously, and that's how we keep track. Okay. All right. So in a roll, okay, and this is a little complicated, but once you have it down, you get it. All right. What you're actually doing in a roll is you're buying to close the position that's threatened, and in this case, the 6 October 43.30 43.20 put spread. Okay, and then you're selling to open the 13 October, and it goes out a week, right? 13 October 43.10 4300 put, and you do it for a certain amount, and in this case it was 25 cents. Okay, and so that's actually what you're doing in a roll. Now Thinkorswim will put it in this format for you, right? And when you go to trade that, all you would need is, it says sell, and here it's a limit. It's a limit order, all right? And so when I rolled this trade, this is what I used, and because it's 25 cents, I know that I rolled it beyond the points that I normally would have rolled that trade. All right. Okay. So a couple questions here. What was the strikes yesterday? The strikes yesterday was 4,300, 4,300. I'm sorry, 4,200, 42, 41.90. Those were the trades that we put on yesterday. Okay. I showed a 12 delta. Yeah, it was a 12 delta for the 4,200 strike yesterday. That's correct, Robert. All right, and it was a 70-cent credit. Very good, excellent. Okay, and so let's move on here. All right. So again, you can do this manually, or you can do it if you have a broker that does it manually, not manually, but automatically as well. E-Trade does it. If you put in the right parameters, you'll be able to roll it. And I actually tested this with E-Trade, and it works well. And then, but I know that is it international or interactive brokers don't do this, right? You have to do it manually with interactive brokers. Okay, I'm not sure about other platforms that do this, but that's how it works. Okay, so anyway, when I rolled the trade, I ended up with this right here. Basically, 6 contracts, moved it to 13 October, right, expiration, and that's what it is today. 43.10 4300 put spread. Okay, and so and it's now at 10 cents. So what we're going to do is we're going to go over, let me see here. Yeah. Okay, so what we're going to do here today is we're going to go over doing this like in real time, and what I would do in real time. Okay. All right. So let's first take where I have it. All right, so let's look at a roll here. So what I'm gonna cover here first is a breached roll I wanted to cover. See, we're almost breached here. So let me get it in there 1 second. Huh, thought I had this planned already. Second here. Perfect. Okay. Save this. Okay. All right. There it is. Okay. So this is the position that I have right now. And so when I go to roll this position, right? Um, it's let's say it's almost breached or breached. Okay. So let's just because we're right here. And so what I would do in this case, and if a position is breached, basically, what I would do is I would roll it up and out. Okay. So let's see what the price is right now for this. Okay, let's edit it. Okay. Oh wait, you're not seeing my screen. Let me share my screen. 1 second. Okay. Okay. All right. So what I would do in this case here is that I would uh, potentially roll it out a week. Okay. So I'm gonna move this. I'm gonna take it out to the 20th. Okay. So the 13th through the 20th. Yeah, that gives us a week. All right. And in this case, if it's breached, I would roll this up a little bit. So I would take the 43.10 and move it up to, let's say, 43.20. Move this one up to 43.10. Okay. And you can see here that I'm rolling it up and out a little bit for a credit in this case. Now, why would I do that? The reason that I would do that is because we already have potentially an oversold market, okay, and good support at the bottom here, and the market's already gone down over 5%. Yes, it could go down more. However, what I'm doing here is buying time, okay. So, and this is something new that I've used, okay, and I've done it with monthlies over time. You know, example is in the pandemic, basically when the market went down over 20% in a pretty short period of time. What I did was I moved out my monthlies, about 3 months out. Okay, didn't pay anything for it, and what I'm calling that is the patience roll. So I moved it out, you know, for about a month, and and allowed the market to do what it was going to do, and eventually it came back because the market generally goes higher, right? It continuously goes higher, and so what I did was I went ahead and tried it for 70 TE, and it's working. It's working pretty well. Obviously, if the market goes down, I'll have to do some other contingency, right, to do that. But this is this is already a breach position, and so it doesn't really cost anything. In fact, I can take a credit for waiting. Okay, and so this has worked pretty well. I've already done it once, and I'm using this position to do it again, possibly. All right. So so a couple questions here. How do I determine that? Each time you roll, you use more buying power. That's not correct. Actually, when you roll a position, you're not using additional buying power because you're rolling it from one place to the other, okay, and you're just moving it over. But it does, and Bernard, it does cost commission. See, so do you use delta to determine the strike for the roll? That's a good question, but I don't typically use delta to do that because the market, when we're rolling a position, the market has already moved down significantly from where we originally put it on. Okay, and so what I'm trying to do is buy time and a little more distance to let the market recover, because typically when it goes down that far, and I'm not talking about like in a pandemic situation or a financial crisis situation, right, where the market went down 30%, 40%. I'm talking about in a normal, typical correction where we have, possibly 5 to 10% correction. You can manage these trades, using this methodology, all right, knowing that the market is going to be coming back. So, Joe, how often do you typically have to need to roll? For these trades, I would call it 20 to 30% of the time. I would need to roll these trades just to be safe. And it comes in spurts. Okay, the rolls, once you roll something, you typically roll it again because the market's in flux and it's going up and down and potentially more down, right? So once you start that process, it goes on for a little while, right? 20 points. So let's see here. Okay, all right. So in this case, again, this is for a breach position, and you can see here where the credit is already moving higher as the market's moving higher. Okay, so now we're above it. Okay, so what I'm sharing here is how you would manage a breach position by not taking a big loss. You roll it out, you push it up, and let the market do its thing, and that's really the process for that. Okay, all right, pretty straightforward. And again, this is something that I'm going to be including in my trade plan, just because it's versatile and it's something that I can use. Alrighty. Okay, so let's talk now about a position here that okay, hold on one second. I think this is a good one here. So let me go to my saved positions again. Actually, I'm gonna. Okay. So here's my saved positions. So I'm going to use an example here of a position that's not breached. Okay, and hopefully you can see this here. I know it's a little hard to see, but I'll let you know what the numbers are here. Okay. All right. So in this case here, today the market's at around 43.20, and so now and what I have, let's make believe here, right? I have a position that's 43.70. Let's go back. 43.70, 43.60. And I want to roll it out. Okay. I want to roll it out. And so I would use and down basically. So this. Roll this up. Bear with me here. Actually, pull this from. All right, now we have it. Okay. All right, so we have the original position 4370, 4360. I would want to roll this out about 7 days. 15th, correct? 8 to 15. Okay, yep. And $43.70. Nope, that's a wrong position here. Sorry about that. So I would use $42.70. That's where I want it. Okay. That's where the problem was. Okay, now I got it. All right. So so now we have a 42.80, I'm sorry, 42.80, 42.70 position, okay? I would want to push it out to okay, and I would not want to push it out to an AM expiration. I want to push it out to a PM expiration, all right? And then what I would want to do is move the strikes down, okay? So here, in this case, if we just rolled it out, right? And now this position is, you know, it is threatened, let's say, okay? If I wanted just to push it out a week, I would get a 50 or 70 cent credit at this point, okay? But what I want to do is I want to get it unthreatened. And so what I typically do is go down about, I go down about 20 points, okay, both sides, obviously. There, and now I have a 30 cent credit, okay? Or 15, more or less 15 or 30 cent credit, right? Now, if I can roll it down further, I would do that too. So I would go down, if I saw that at this point, I would go down to 42.40. Short strike would be 42.50, okay? And I would be able to roll that 30 points down for about 0 credit, 0 to 10 cent credit, okay? That's basically what I would do on this particular situation. And so let me see, does 20 points, 5 cent credit drive, then you choose that date. Yeah, so basically I would, you know, I like to do 20 or 30 points when the position is threatened, just to de-risk it, okay? And in this case, you can see here now where it's going up, right? So 20 points is not enough. Actually, it is enough. You know, I've been doing this for a while, and just keep in mind that, you know, this position didn't start at this level, right? It actually moved, you know, moved down a lot, you know, before we actually call it threatened. And so once the market moves down, right, the further down it moves down, you know, the better chance you have of a reversal. And so the goal there is to get it away from the money and in a place where it's not threatened anymore. Okay. So so at what point do you consider rolling further in time in delta as well? So once a position gets, you know, once you have to roll a position, you typically have to roll it again. And I can tell you that the position that was breached, it's been rolled about, you know, it's been rolled about 6 times. Yes, you know, again, the goal there is not to get more money, not to receive more credit, but the goal there is to de-risk the position so that you have a chance of it being profitable. All right, and So can you discuss you want to try threaten point? Okay. All right. I don't usually get to 1 DTE when I roll the trade. I usually do it, several days beforehand. And it's not based on expiration. It's based on the distance to the market that I have, right? Is rolling considered a day trade? Rolling can be considered a day trade if you if you place a position and you roll it on the same day. That is a day trade. So you want to be careful with that as well. Okay. Do I do any ICs? Yes, at times I do ICs. However, keep in mind that there's two things that go against you for ICs. Number one is that the market is generally going up most of the time. Two, the distance from the market on a call spread is much lower, much less than it is for a put spread, and markets can rip higher very quickly, just as much as a bear market can. All right. Yesterday we were up 1%, and so you want to be careful with using call spreads, and I don't use them that often. Do you ever widen the strikes on a roll? I have not widened on SPX, but however, I know there are guys that I trade with that do that, and I have done it for spreads on stocks. Okay. See here. Do you roll for you roll to make a credit? Actually, I do. I do roll to make a credit, to make more credit, and I probably will with this one that was threatened. If the market continues moving up, because you can. And if you have a market that's bullish and that's moving up, I do this with the monthlies a lot, and I would recommend you looking at my monthly trade. I did a session where I shared all of this year's trades, for half the year for monthlies, and in there you'll see that when a monthly trade, the premium goes down quite a bit, I'll actually move the trade up within the same expiration to get additional credit. And I would encourage you to watch that video. I do have a link to it. I can share that with you, and I'll put it actually in the notes. I'll put it in the presentation, so you have that link. Okay. Alrighty. Any other questions? See here. I think that's all the questions. You're welcome. You're welcome. All right. Hopefully this was of value to you, and you're able to use this in your own trading. And I do plan on doing more of these live sessions in the future, especially when there are things that are that we find out that are really good. We'd like to share it with you guys, and for you to make some money there. Okay. So with that, that concludes the session. Thanks for joining. This includes the session for breach trade and a trade that's threatened and how to manage that trade. And hopefully you found this of value. All right. All right. Thanks, guys. Appreciate it. And we'll talk to you tomorrow.